So Lam Research is an interesting semiconductor company that services processing equipment that's used in the fabrication of integrated circuits. Of course, semiconductor stocks like Lam Research are getting increasing attention because of the rising effectiveness of AI. So, what's a fair price to pay for Lam Research stock? That's the question I'm going to answer in this video. I'm going to do a discounted cash flow valuation on Lam Research stock to determine a fair value for this company. So let's jump in.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so one of the inputs I need for my valuation of Lam Research is the beta at 1.49 according to Yahoo Finance. I also need the company's market cap, the cash balance, and the total long-term debt at 93.2 billion, 6.1 billion, and 5 billion respectively. I'm also going to need the company's diluted shares outstanding at 1.3 billion in the most recent update. And finally, I'm going to utilize the Wall Street analysts' estimates that are following Lam Research Corporation and what they believe the company will deliver in free cash flow over these next 5 years. Of course, starting with the base year of 2024, which is already completed for Lam Research on June 30th, 2024. So starting in 2025, they expect free cash flow of 5 billion, 4.9 billion, 5.65 billion, 5.73 billion, and 5.96 billion. So not very much growth in free cash flow expected over these next 5 years for Lam Research Corporation. Now, that remains to be seen if the actual results turn out to be what is forecasted. And whenever you're dealing with the forecast, nobody knows what's going to happen in the future. The analysts on Wall Street use their best estimates to come up with what they believe the company will deliver in free cash flow. Remember, these Wall Street analysts have close relationship with the management teams of the companies that they're following, the CEO and CFO. And so they're in close communication and they can ask questions about the company's financials to help them derive their financial models to make these predictions of free cash flow. All right, so now that we have all the inputs we need, we can jump into the model for deriving a value for Lam Research stock. Starting with the 2024 number that was already completed, 4.26 billion in free cash flow. That's expected to increase to 4.95 billion, then 4.9 billion, etc., all the way to 2029. I already shared with you these numbers I got directly from the Wall Street analyst estimates. From the year 2030 to 2034, I'm incorporating my own forecast for free cash flow growth for Lam Research at 6% each year for those next few years. And then starting 2035, I have the company's free cash flow growing at a 5% rate to infinity. The 5% rate represents the rate that I believe developed economies in the world will grow nominally, not inflation adjusted. And so that's why I forecast the company 5% to infinity. I expect them to grow at roughly the rate of the economy worldwide. So because these are cash flows expected in the future, we need to bring them back to today. In other words, get the present value of those future cash flows. To do that, we need a weighted average cost of capital. The weighted average cost of capital I'm using for Lam Research is 12.85%. I get that by taking a cost of debt of 7.5% and a capital asset pricing model cost of equity of 13.44%. Using a beta of 1.49, a risk-free rate of 4.5%, and a market risk premium of 6%. Since the company has $93 billion in market cap and $5 billion in debt, I've assigned a target capital structure of 10% debt and 90% equity for Lam Research Corporation. So when I utilize this weighted average cost of capital, apply it to all of the cash flows expected from Lam Research between now and infinity, I get a value of operations at 64.38 billion for Lam Research. Now, we're almost done, but not quite there yet. We need to add cash we need to add the cash balance to this value of equity and subtract the debt. And so that brings us to a value of equity of 65.5 billion. And then we need to divide by the number of shares outstanding because we're trying to figure out what a fair price per share is for this corporation. When you and I are buying stock, we're usually buying the stock in 1 share increments. We're not in the position to buy the entire company outright. At least most of us watching, right? I don't think any of you watching are an individual that's considering buying this corporation outright for roughly $65 billion. So we got to divide by the number of shares so we get a price per share. And recall, I shared with you that the company had 1.3 billion shares outstanding. And so when I divide that, I get an intrinsic value per share of $50.22. That compares to the market price of $72.44. So according to my base case here for its intrinsic value, it looks like Lam Research stock is slightly, or you can say overvalued, according to these calculations. Now, the company's beta at 1.5 is relatively high. So I wanted to do a couple of scenarios trying to see what the value would be if I lowered the beta, if I adjusted the beta lower. So if I adjust the beta lower to 1.25, it gives me a value of $59.22, which would still suggest overvaluation. But if I lowered the beta all the way down to 1, I would get a value of $74.28, which would suggest that the stock is fairly valued. So this stock, based on the scenarios I've looked at here, would suggest that it's either fairly valued or overvalued between those ranges, depending on what you feel about the inputs that I used. If you feel the beta that I used is accurate, that I should not be adjusting it lower, then you might feel that the stock is overvalued. But if you think the beta is too high and I should be adjusting it lower, then you might feel the stock is fairly valued. In my opinion, I don't think the beta should be adjusted lower. I think the current beta is the appropriate beta. And so I do feel the stock is slightly overvalued according to these metrics and these calculations. Of course, I like to allow for a margin of safety when I'm making calculations. So I usually allow for roughly 10% margin of safety. So if you apply that 10%, of about $7, you get to $65, and it would still suggest an overvaluation for Lam Research Corporation. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.